Hi, this is Lara at Elliott Wave Gold with your daily analysis for Thursday the 6th of August. I'm recording today's video 4:45 p.m. Eastern Standard Time on Thursday the 6th Eastern Time. I was looking for the final wave of the triangle to end, and I'm still confident when it's done the breakout will be downward. It really is taking its time and testing our patience. I have a target which might be where the triangle ends. It still needs a final push up. The target is now at 1099. It needs to move price at least slightly above 1094.98 before the final wave is likely to be complete. Look out when the breakout comes. It may be very strong, it might be very swift, and it might be quite short-lived. Fifth waves following triangles for gold are sometimes surprisingly short in terms of duration and length. A new low below 1081.10 at any stage would confirm that price is breaking out downward, especially if it comes on a day with higher volume. But I have a closer price point for you today. A new low below 1087.42 has a lower probability that the breakout is underway, but it's still a reasonable probability. So depending on your risk appetite, you might want to use one or both of those price points. This video will focus on most recent movement. To see a bigger description of the bigger picture at intermediate, cycle and primary degree, look at last week's end of week video. We want to keep the length of the videos reasonable. We're looking for the end of a third wave at minuet degree. It subdivides subminuet 1, subminuet 2 was a relatively deep zigzag, subminuet 3 has a typical curved look to it for gold's impulses, subminuet 4 is a very time-consuming, regular, contracting triangle. It's very, very close to completion now. The final fifth wave out of it might be quite short and should be very, very likely to move price at least slightly below the end of the third wave to avoid a truncation. If it reaches about 1071, it will be equal in length with the first wave. Very importantly here, there is no Fibonacci ratio between subminuet waves 1 and 3. Gold almost always exhibits at least one Fibonacci ratio between the three actionary waves of its impulses, so I am expecting the final fifth wave is very, very likely to exhibit a ratio to either 1 or 3. Equality in length with 1 is the most common, so this first target for that reason also has a good probability. But the other, stronger reason why I would slightly favour that first target is the fifth wave to follow fourth wave triangles for gold is often surprisingly short. We've been surprised before, I don't want to be surprised again. If we get down to the first target and the structure of the fifth wave is incomplete, or if price just keeps on falling through it, then we'll use the second target. At 1035, minuet wave 3 would reach 4.236, the length of minuet wave 1, and at 1038 about, subminuet wave 5 would reach 0.618, the length of subminuet wave 3. Because I don't know exactly today where the triangle has ended, this target 1071 and the upper edge of this one, lower edge of this one, 1038, are just approximate. When the triangle is definitely over and we're breaking out to the downside, I'll recalculate these two numbers and so they may change a little. If upward movement invalidates the wave count at the hourly chart level with a new high above 1103.61, then the invalidation point moves up here. This fourth wave correction is incomplete and it's unfolding. It can't move into first wave price territory above 1157.14, but I wouldn't expect price to get anywhere near that point even if the triangle is invalidated. If it is invalidated, then this fourth wave would probably be morphing into some kind of sideways combination, and so a drift sideways and still a downward breakout would still be expected. But at this very late stage of this triangle formation, I am very confident it is a triangle and it's almost over. When minuet wave 3 is a complete 5-wave impulse, then we'll expect a fourth wave correction at minuet degree. The invalidation point will move up here to minuet wave 1, and the fourth wave correction would be most likely to be a zigzag, but it may also be another triangle. If it's a zigzag, it could be relatively quick and sharp. It would most likely be relatively shallow and most likely end within the fourth wave of 1 lesser degree price territory, so somewhere below this high and above this low. The bigger picture for intermediate wave 3 still expects a further increase in downward momentum. Minor wave 3 should show a substantial increase in momentum beyond that seen for minor wave 1. We have a slight increase here beyond that seen for minor 1, but it's not as strong yet as a third wave normally is, and so we still have the strongest piece of downward movement ahead toward the final target, and it's probably going to show up as a fifth wave to end one or more of these third wave corrections, because that's really common. That's what gold does. It exhibits very swift, strong, extended fifth waves, very typical of commodities, and for gold, when they turn up, they're usually to end its third waves. We saw this here. This was a fifth wave to end a third wave, and we might be going to see something quite explosive like that again to come up to end one or more of these third waves. Let's look at this triangle. We see up here is this point up here. We have a zigzag for D and a really slow zigzag for E, taking its time, subdividing 5, 3, 5. This 5 up is incomplete. I expect we have minuscule 1, some kind of combination possibly for minuscule 2. And minuscule 3 subdivides perfectly as an impulse. Minuscule 4 may not move into minuscule wave 1 price territory below 1087.42. I expect minuscule 4 is over and we're in the final little wave up for minuscule 5. Submicro C in its entirety is very likely to move at least slightly above the end of A, above 1094.98, in order to avoid a truncation. At 1099, minuscule wave 5 would reach equality in length with minuscule wave 3. Also exactly at that price point, submicro C would reach equality in length with submicro A. Because this target is exactly the same, calculated at two different wave degrees, it has a fairly good probability. This target now, because of the time taken in this sideways slow movement, would now see the final E wave overshoot the AC triangle trend line. E waves end in one of two ways. They will either undershoot the AC trend line or overshoot it. Undershooting is much more common, but when that doesn't happen, they overshoot. So, and we might find resistance at the upper edge of the channel drawn around the zigzag of microwave E. But as soon as we get any new high above the end of 1094.98, look out, that could be the fifth wave finally over. At any stage above that point, look out for an end to this whole slow sideways drift, and I'm still confident the breakout should be downward. And so at any stage, a new low below 1087.42 could not be a fourth wave correction within submicrowave C, so a new low below that price point would tell us that submicro C would be very likely to be over, and because this consolidation is now so very mature, that may be the earliest price point below which we might have a little confidence that the triangle is over and we're starting to break out downward. We'll have even more confidence once the lower BD trend line of the triangle is breached, and finally full confidence below 1081.10, because at that stage we couldn't be seeing downward movement as a continuation of submicro B, because within a zigzag B can't move beyond the start of A. I'm still expecting the breakout, when it comes, is very, very likely to move at least slightly below 1072.09, so that this fifth wave to end minuscule wave 3 avoids a truncation. To the upside, microwave E of a contracting triangle may not move beyond the end of C above 1103.61. I'm still reasonably confident that this invalidation point will hold, because this triangle structure subdivides so perfectly and is supported by regular technical analysis. Some regular technical analysis at the daily chart level. This is a classic technical analysis pennant pattern. They are the most reliable continuation pattern. This formation fits the guidelines for a pennant. It's still within the maximum limit of a 3-week duration. It's come within a clearly defined trend. The trend is down, and it's unfolding on declining volume. It's also adhering beautifully to its trend line, so it's a tightly controlled pennant. So it has a really high probability that we are going to break out downward because they're such a reliable continuation pattern. Also, while it's unfolded, we have this day with the strongest volume so very clear. It was a downward day, so that's another indicator telling us we're going to break out downward. While price is unfolding sideways, ADX is still rising, so even though price is drifting sideways, the rise of the black ADX line tells us there is a strengthening trend, and the negative DX line still is above the positive DX line. The trend is still down. And that's another piece of information telling us we're still most likely to break out downward, not upward. RSI is returning from oversold. It's not quite managed to get above 30 yet. I expect what might happen is the breakout will be short. It will make a slight new low below this low. RSI will return to further oversold, but to not as deep and extreme as this point here, and then we'll have some classic positive bullish divergence between price and RSI, and then we'd be ready for a deeper, sharper correction. So the next fourth wave, if it turns up to be a zigzag and moves price reasonably higher, could resolve that divergence and provide some bullishness to bring RSI back from oversold. So this all actually fits really nicely with the Elliott wave count, particularly the pennant pattern. I'm expecting that we're still going to find resistance at this bright aqua blue trend line that I've drawn. It's provided support here, almost here, and resistance here. It's providing again resistance today. An overshoot of that trend line would be expected for the Elliott wave target that I have, a 1099. That's acceptable as long as price returns back below the trend line. And if we overshoot this aqua blue trend line, look out for upward movement to find resistance at the upper edge of the pennant pattern. If that happens with just an overshoot, just the upper wick of a daily candlestick, and price returns quickly below, and if we start seeing downward movement below the lower edge of the pennant pattern, then I would expect we are breaking out to the downside. And if the breakout comes for a down day with increased volume, I will be very confident we are breaking out downward. That's all for me today with your gold analysis. I hope that all our members are having a fabulous day.